I don't know what stage of loneliness I'm at, but I'm watching the FOMC meeting so you don't have to, and here are my major takeaways. Welcome back to the channel, tune in or go stout. Yes guys, you heard me correctly, another month has passed by and that means the Fed has just given their update on what they think is happening to the market.
The Fed is going to be lowering rates, so get your money out of T-bills and put it all into waffles, tasty waffles with lots of syrup.
Waffles! Buy waffles! 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 Waffles!
I'm going to try my best to make this understandable for you. Before we get into it, I need to make it clear that I am not a financial advisor and this is not financial advice, just simply giving my outlook on what the Fed is saying about the market. So first, let's get right into it. Let's talk about interest rates. Jerome Powell said that the Fed is going to leave the interest rate untouched and on pause, leaving it within the target range of 3.5 and 3.75. This breaks the 3-month trend of receiving rate cuts, and for what it's worth, markets handled this pretty well. If you were hearing some of the chattering, it was either going to be a massive sell-off or a major rally, and aside from the VIX, which saw an immediate upward trend of about 5% before reversing that and closing basically neutral for the day, most stocks did not rally off the news of a pause, but they also did not crash. And this is basically because Powell maneuvered this meeting like a absolute pro. As much as we don't like the Fed over here, Jerome Powell did not sell fear this week as he usually does. But that's mainly because he didn't talk about the major issues pressing the economy right now. What do I mean by that? Well, when Powell was asked about jobs, he said he felt like the employment sector has stabilized for the most part, which is a far cry from the last meeting in December where he said that we cannot trust any of the government data. I mean, he quite literally said that whatever number they give us on the job reports, we might as well subtract 60,000 jobs from that and undermine the credibility of the BLS, which again did not have much credibility as it stood. But to reverse course in less than a year and say that the job market has stabilized when we were just saying that the job market might be the straw to break the camel's back is a little funny, but it's what the market wanted to hear. And if you know Powell, he doesn't really care about what the market wants to hear, so it was good to see him take this approach. And when it came to inflation, he pretty much said the same thing. He said that we're not at the 2% goal that was set by the Fed, but largely that is because of the goods inflation being led by the tariffs, and it is expected that the effect of the tariffs will wear off by around mid-2026. This has been the same talking point since 2025. After tariffs went in place around April, they've been saying that the effects will fade away at some point and that inflation is being artificially inflated because of these tariffs, but the effects of the tariffs on the economy have pretty much not changed since they've been put in. It's been hovering at about 3% inflation, and if you were to take those tariffs away, we would probably be around 2.2 to 2.3% inflation, but Powell once again has said just wait on it.
Just wait on it. Just wait on it, nigga. Stop asking me shit that I don't know. Oh no. Just wait on it.
And this is really what the market wanted to hear as well. Because if employment is not a worry and inflation is stabilizing, then that opens the door to more rate cuts in the future. Does that mean that we'll see rate cuts next month? Probably not. By the tone of Jerome Powell, while he doesn't seem super bearish on the market, he definitely is not looking to cut the rates any further for the near future, signaling that the Fed is going to want to keep rates paused till maybe May, which is when he'll leave, opening the door for whoever's elected to drop rates by June. But we could see something crazy happen before that and we could get another interest rate cut. It just did not seem too likely and I would not bet on it. At the moment, that is, the Fed is known for flipping on a dime. Okay, now is where the magic powers of Jerome Powell started working overtime. When the reporters and the people asking questions started tackling some of the bigger issues on the Fed's plate that were not monetary policy, the Fed chose to avoid but answer slightly. When Powell was asked about his ongoing criminal investigation at the hands of the DOJ and what that meant for Fed independency, he pretty much pleaded the fifth, but did add a remark for the future replacement that we'll see in May and told the person after him to not get too involved into election politics. I mean, just like we stated in the last video, stay away from election politics if you're in the Fed. Nixon shock was not a good thing, and anytime the Fed and the government are one in one, we usually see very bad things happen to the overall economy. So I give this a stamp of approval. I feel like he's spot on for saying this. And now for the the elephant in the room, which I was waiting for him to address the entire time, and I was a little sad that it got such a short response. But when asked about gold prices, and I have to make that clear that this is about gold prices and not silver, he didn't really touch on silver, but he did tell people to not read too heavily into the pumping of these precious metals and that it does not signal a problem in the Fed's policy, and said that the Federal Reserve was still credible, I guess as credible as it can be. You have gold adding the equivalent of Nvidia's market cap in just 3 days. I don't blame him for taking this stance. Like, how do you explain that everything is fine and you shouldn't worry about metals exploding in value as the dollar loses value? And not to mention, the dollar is losing value because you decided to use the same playbook that Japan has been using in their economy and has made it so that they can never escape the debt trouble that they're in. As much as I'm not a fan of Trump, when we talk about economic policy and the dollar debasement that's happening now, we have to thank Jerome Powell and his policies that led to this moment. I don't know. It makes me mad that the Fed is supposed to be a independent body, but whenever they do something that destroys the economy, the blame goes on the president. It's kind of crazy. I feel like both people can be blamed and take accountability. It doesn't have to just be one person, but I digress. Let's look into that decision to keep the rates paused, because that's where another hidden detail lays. So there was 2 votes to not pause the rates and actually cut the rates even further. And if you've watched me do these updates, you're probably familiar with one of the names already, Stephen Miran. This is a guy who's supposed to be the economic advisor to the White House under Trump, and he's been pushing for rate cuts since he's gotten to the seat, and not small cuts like 50 basis point cuts, and has been pleading to get back to a lower interest rate like around 2% or something. And the other dissenting voice was Christopher Waller, and you might have heard that name more often recently, and that's because he's a contender to replace Powell in May. So again, another one of Trump's guys pushing for more rate cuts. And funny enough, Christopher Waller pushing for a 25 basis point cut might be the reason that he doesn't get the Fed chair position. People were joking around and saying that if he didn't push for a large cut like 50 basis points, then Trump would just throw his name out the window because he's not willing to cut the rates at the rate that Trump wants them cut. But them voting to cut it by 25 basis points lets you know what's coming in the future and what the next Fed chair is going to do if it is a Trump loyalist. And rate cuts and a decreasing dollar is not conspiracy. While I'm in the camp that says that debasing your currency does a lot more to hurt your economy than it does to benefit your economy, there is a very vocal side that has a lot of good points, I may add, that is arguing for the devaluing of the dollar to grow GDP, help us with exports, and essentially allow the economy to explode. But in my humble opinion, I don't think that people are accounting for how quick this can go wrong. One of those people being Stephen Miran, who is actually the author of the Mar-a-Lago Accord, which is a playbook to weaken the dollar so we can pay back and correct our trade deficit. It's pretty scary to read, and scary in the terms that what Miran is saying is not completely crazy, but it's just an insane thing to actually pull off. In the best case scenario, you fix the trade deficit, which is great, but in every other outcome, even the average outcome, you risk high inflation, you increase the risk of currency wars with countries like China, and one of the main things that we're seeing already is you're gonna see capital flight. Investors withdrawing their money from the American economy to move it elsewhere, which would further damage the economy. And something that I don't like seeing that's spilling over from politics into economics now, which I guess these have always been very closely tied, but the whole moving the goalpost thing when it comes to policies or things that are said is happening a lot when it comes to economics. Just in the past couple of days, when seeing the dollar drop, a lot of people have been saying that this is great for GDP, this is great for our exports, this helps manufacturing, but people ignore the fact that we are not a manufacturing economy anymore. We are not China. And while this is a step to maybe make it easier to reach that point again, it seems like we have none of the groundwork laid out for that to even happen. Manufacturing is not coming back to our economy like expected. This is quite literally Jordan jumping from the free throw line. It will either be a moment if that goes down in history, if this can be pulled off, or they'll fall extremely short and it'll become a meme. But the more that I think about devaluing the dollar and what that means for the world, I realize the trump card that is actually being played here. The world is being economically cut. When I mentioned yesterday that if the dollar loses dominance, we're not able to weaponize sanctions, I was not really looking at the whole picture. So when I talked about the Nixon shock and talked about how it caused a rift in trust between the Fed and the government, leading to inflation like never before, I didn't really look at the global effects at that time either. The crisis in America in the 1970s led to global stagflation, led to one of the worst energy crises ever, the OPEC oil shocks, and caused major shifts in monetary policy and industries. I say this to say that what America is doing now by devaluing the dollar is putting the world in the same position. While it does carry a high risk reward factor, the world really has no way to combat what America is doing to the currency. I mean, they can complain all they want, but just look at it from America's point of view. We still hold dollar dominance, we can still weaponize sanctions at the moment, and if inflation is too crazy in our own borders, then it will affect people globally. And if they don't like it, what are they going to do about it? I mean, I hate to sound so Italian when it comes to this issue, but just think about what their options are. They're unable to jump ship to the yuan because that's CCP controlled. As good as the euro looked, it's fractured and it has a lot of debt issues. Crypto is too volatile and the framework is just not there to make that change happen. Moving back to the gold standard would cause a nuclear war, like I said, and I don't even think I'm exaggerating too much when I say that. While it would give the government some type of financial discipline, it would probably lead to the largest famine in American history. And even the option of jumping to a central bank digital currency doesn't change the system that we have in place now, because to have a digital currency, you would still need the trust that America is spitting in the face of. But this goes back to the Treflin dilemma. To have a global reserve currency, you have to run trade deficits, and those same trade deficits, once sustained long enough, will lead to the erosion of confidence in your markets, potentially leading to the failure of that reserve system. Pretty annoying paradox to be stuck in the middle of, but this is where we find ourselves today. But we'll see where this road takes us, because I don't think we're turning back. They seem pretty dead set on continuing with the plan, and we'll see how it plays out. The next FOMC meeting is not until March 17th, so we'll see what happens in the time frame between that. But everything said at the meeting today seemed pretty average. The Fed is once again going off the information, which in today's age is not enough. Then as long as that keeps being the game plan, then what you do to win stays the same. Have stake in the market. As scary as that seems right now, they're playing with currency, so anything that doesn't hold value is basically worthless. And as long as we don't have a black swan event, knock on wood, then prices are going to keep going higher because inflation is going to kick in, so assets will rise in value, so asset owners once again keep winning. But this meeting, just like everything else when it comes to economics, left a lot of unanswered questions. I mean, even with what Powell said about gold is still the elephant in the room, as well as silver. How do the world economies navigate with the prices so high? And will it continue to keep soaring in price like it is right now? Because if it does, this doesn't seem sustainable. The people who own gold and silver and precious metals may retain their purchasing power, but for most Americans, they're gonna struggle. The stock market is not the economy, and most Americans are not invested into anything. Affordability will not only be a term, will be the determining factor in where you fall into the class hierarchy that they're trying to establish. And while the metal prices do vindicate a lot of people who have been saying this is the future, what happens from here will be the real test of the system. Will it be replaced with a gold-backed brick currency, or will it be the Swiss franc? Only time will tell. But yeah, that is the recap of what happened at the FOMC meeting and a little bit of my opinion. If you made it this far, let me know down below in the comments what you think. Do you think the Fed is just playing it safe, trying to stay out of politics, or do they truly feel like everything is starting to stabilize? If you haven't already, like and subscribe to join the thread. And with that being said, thank you for tuning in. Until next time.